Hello, I'm Brent Stafford, and this is the weekly market wrap-up, brought to you by Crush the Street and Viral Network News. The markets were schizophrenic this week, with each of the major indices moving in opposite directions. The Dow Jones Industrial Average broke another record on Wednesday when it closed the session at 15,746. However, all gains came to a halt on Thursday, which saw a major downturn affect all sectors. Equities took a dramatic hit on Thursday, with the Nasdaq leading the decline, down nearly 2%. The S&P 500 gave up over 1.3% in value, and the Dow lost a little under 1% against the prior session. So what's going on with the markets? One answer may be that the Federal Reserve's monetary experiment, euphemistically labeled quantitative easing, simply doesn't work. Joining us is Josh Animoto, Senior Technical Analyst for CrushTheStreet.com. Thanks for joining us, Josh.
Thanks for having me.
So Josh, quantitative easing, is it working?
The evidence says no. We're seeing poor earnings reports and forward guidance from major companies, and most importantly, you're not seeing a lift in the labor market.
Josh, let's take a look at the chart you provided us on the tracking numbers of the jobs curve over the past 12 months. You've combined data from ADP and the Labor Department, of which new numbers are coming out today. What's your estimate?
I believe that in a few hours, when the report is released, we'll see 184,000 jobs created for a month of October, which is a big boost from September. But we also have to keep in mind that that's because September numbers were really poor. And when you look at it from an overall basis, the jobs growth curve, both from the Labor Department and the ADP numbers, they are doing very poor.
Josh, we saw the Dow hit a record high on Wednesday and then, of course, turn around on Thursday with a dramatic decline across all the boards. Is this the kind of schizophrenic behavior you were warning us about last week?
Absolutely. It seems that as if we've built a roof, but we haven't built the foundation. At some point, when the Federal Reserve takes tapering off the table, you're going to see the roof crash back down. That's just simple physics.
Maybe the market makers should be required to take a refresher in Physics 101. Thanks for joining us, Josh.
Thank you.
All right, let's talk currencies. The U.S. dollar index settled into a tight trading range around the mid-80 level for most of this week. However, a surprise announcement of aggressive rate-cutting measures by the European Central Bank shot the greenback up above the 81 level temporarily. The dollar-yen pair was also range-bound throughout the week, but received an intraday boost based on the ECB announcement. However, the yen skidded to a one-week low shortly afterwards, as poor performances across the Asian markets pressured the currency. The euro slipped to a 7-week low against the dollar based on the ECB's interest rate cut, a move that caught many investors unaware. On the technical charts, this move appears to have put a resistance cap on further upsides, meaning that we could see improvement in the bottom line for European exporters should recent trends reverse. Well, that's it for currencies. Let's turn now to winners and losers and our picks for the week. The winner for this week is Twitter, ticker symbol TWTR. It had a very successful opening day, with the stock at one point trading 90% above its IPO price of $26 before settling into a range around the mid-$46 level. At this rate, Twitter's market capitalization is over $25 billion, although it remains to be seen whether they can build upon their success. Twitter has never turned a profit, which means it has a significant risk potential if future earnings don't meet expectations. The loser for this week is Whole Foods Market, ticker symbol WFM. The stock lost over 9% of valuation after a forward guidance adjustment, which also contributed to dragging down the Nasdaq. Although its quarterly earnings report was respectable, the company lowered its full year 2014 outlook for revenue, earnings, and comparable sales figures. Because of its high price-to-earnings ratio, investors are more likely to panic dump their positions at the first sign of trouble. Well, those are our winners and losers for this week. Now we want you to weigh in. You tell us in the comment section below what company you think is the top pick and the stinker for the week. Finally, let's turn to precious metals, which had a rocky week. Gold spot price took another hit Thursday, dropping down nearly 1% from Wednesday's close. The dollar strength that came as a result of continued monetary easing by the ECB weighed in on valuations, which does raise questions about gold's near-term forecast. Silver also took a hit, absorbing not only the stronger dollar, but a weak commodity sector in general. Finally, palladium was the only precious metal to maintain a strong performance throughout the week, due primarily to labor strikes in South Africa, which threatened to choke off supplies. However, that still didn't prevent palladium from getting sucked into the greater market downturn, with the spot price being lowered by 0.4% against the prior session. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure you subscribe to our YouTube channel and find us on Facebook and Twitter. For Viral Network News and Crush the Street, I'm Brent Stafford.